everyone. With the craziness of the latest Ethereum update and the crypto market, I'll talk about the Ethereum hard fork in simple terms to give you the highlights, and then go into more of the technical details later in the video. But before we get into all of that, I'd really appreciate it if you could hit the like button for the YouTube algorithm to help push this video to others who are interested in the latest in tech and data science. Turning the like button blue is a great way to learn about and earn a lot of money from Ethereum. So thank you for doing that. With that said, let's get into the video. So I'll go into the London hard fork. Now it's formally called Ethereum Improvement Proposal 1559 or E1P 1559, and it reforms the transaction fee market along with changes to how gas refunds are handled and the ice age schedule. For a simple summary, it's a transaction pricing mechanism that includes a fixed per block network fee that is burned and dynamically expands and contracts block sizes to deal with transient congestion. Meaning, since it's burned, there's a decreasing supply, making Ethereum a deflationary currency, and it deals with transient congestion to account for dynamic fees. Now, if we go to their actual website here, ethereum.org, we see the London hard fork on August 5th, 2021, released 12:11 p.m. UTC time. Now, if we go to the actual summary here, 1559, fee market change for Ethereum 1.0 chain. We see here that it introduces a new transaction type with this particular format. So the key details here are that it's a base fee per gas in protocol, which can move up or down each block according to a formula, which is a function of gas used in parent block and gas target, which is the block gas limit divided by elasticity multiplier of the parent block. So again, we're dealing with dynamic block sizes and dynamic fees. So that algorithm results in the base fee per gas increasing when blocks are above the gas target and decreasing when blocks are below the target. And as mentioned before, the base gas fee per gas is burned, meaning will be a decreasing supply of Ethereum, making Ethereum a deflationary currency. Now, transactions specify the maximum fee per gas they're willing to give to miners to incentivize them to include the transaction, which is known as the priority fee. And transactions also specify the maximum fee per gas that they are willing to pay for total, which is the max fee, which covers both the priority fee and the block's network fee per gas, aka the base fee. So to put in simple terms, transactions specify the max fee, and max fee equals priority fee plus that base fee. Now, the transaction will always pay the base fee per gas of the block it is included in, and they will pay the priority fee per gas set in the transaction as long as the combined amount doesn't exceed the transaction's maximum fee per gas. Now, for the motivation behind the London hard fork, there are 4 key details here. There is a mismatch between volatility of transaction fee levels and social costs on transactions initially, as we see from the past, 5, 6, 7, 8 years. There's a lot of price volatility, not just in the price, but the underlying fees as well. And it accounts for that social cost on transactions, how popular it is, how much demand there is, how much is traded. And there are needless delays for users. Sometimes you could wait minutes, sometimes even hours just to get your transaction confirmed, which can drastically affect when you buy or sell your Ethereum. There's instability of blockchains with no block reward and inefficiencies of first price auctions. So that current approach of an auction system of bids, very inefficient. So basically, this ensures that only ETH can ever be used to pay for transactions on Ethereum. Now, an important aspect of this fee system is that miners only get to keep the priority fee, meaning the base fee is always burned, meaning it's destroyed by the protocol. Again, that deflationary aspect to Ethereum and the decreasing supply of Ethereum. So that ensures that only ETH can ever be used to pay for transactions on Ethereum, cementing the economic value of ETH within the Ethereum platform. and reducing risk associated with miner extractable value, or MEV. Now, additionally, this burn counterbalances Ethereum inflation or gives way to Ethereum deflation while still giving the block reward and priority fee to miners. Finally, ensuring the miner of a block does not receive the base fee because it's important because it removes the miner's incentive to manipulate the fee in order to extract more fees from users. Therefore, there's less price manipulation and fee manipulation by miners, which is great to hear. And it goes into the technical specifications down below. I'll go into a bit more detail on that later in the video, but for now, these are just the sort of the highlights of EIP 1559, that fee market change for the Ethereum chain. So now another great improvement is you can hit the subscribe button and turn on bell notifications to get notified when my new videos get uploaded. It's completely free to subscribe and you can always undo it later on. So thank you for doing that. And with that said, let's get back into the video. Now I'll go over some trending tweets from Twitter. Now with EIP 1559 being released as of the recording, we see here that there are plenty of tweets here just going over everyone's I'm feeling so London gift with the hashtag E1IP1559. So definitely a lot of buzz around social media, not just Twitter, but Instagram, TikTok, etc. Now, if we go to the next part, so speaking of fees, let's check on those gas fees, right? So if we go to etherchain.org, we can watch as ETH gets burned with EIP 1559. It says here in total, over 4,000 ETH have been burned up to now, just within the first day or so. Now, if we take a look at the chart here of what looks like the past day, we see here the overall fee has been trending slightly down. Looks like it's been pretty flat the past for the overtime. Now the base fee right now is about 33, and total burn, as we mentioned, over 4,000, and the base rate or the burn rate rather per hour for 1 hour is about 2 ETH per minute, which right now at the current price of about 2,800 is about $54 to $5,600. And the current burn rate for the past 24 hours is 2.79 ETH per minute. And the gas target is 15,014,619, and the block utilization is 62%. And we can take a look at the different gas rewards, or gas use, and the respective rewards. And just another quick fee check here, tips and burn. We see here it's been fluctuating quite a lot. The base fee we see here has been holding pretty steady at around 28 to 33, 34. Number of transactions, again, very volatile here. And respective gas as well. And if we take a look at the gas, we see here since July 29, we see that's been pretty flat relative to these crazy spikes here that we see on certain days. If we go to Thursday, August 5th, here we see this little spike right here. Not really little, it goes all the way to 300, but then it comes back down to about 30. So it's been hanging around 30 for most of the time. And it's interesting here, it breaks down the gas price by time of day. So if we see here that looks like at Saturday at 9 p.m. or 9 a.m. PDT, the average gas price is 279. So interesting to note that there are certain periods throughout the week, each hour, that it's higher. So interesting to note there. And if we go to, speaking of fees, now Ethereum is burning $10,000 every minute after the upgrade. So over $2 million worth of Ethereum tokens has been burned since the London upgrade was deployed this afternoon. After the highly anticipated London upgrade was introduced to Ethereum, the network is already burning 3.6 ETH, or about $10,000 every minute on average. EIP 1559 made it so a portion of all fees is now destroyed instead of going to miners. This was done to counterbalance inflation while giving the block reward and priority fee to miners. So roughly 3.7 ETH, just over $10,000 are being burned every minute according to EtherChain. So popular NFT marketplace OpenSea is the largest ETH burner, has over 69 ETH or over $190,000 worth of tokens, which are thanks to transactions it facilitated since the upgrade. And OpenSea was followed by 2 iterations of DeFi, trading protocol Uniswap, V2 and V3. And so far, experts are and members alike are demonstrating positive sentiment. It's a huge day for the Ethereum ecosystem. Now, every transaction, NFT, purchase, or loan on the Ethereum network will result in ETH being burned, making ETH a deflationary and inflation-busting asset. So if you remember that the narrative around Bitcoin is it's deflationary currencies, a hedge against inflation. Now, Ethereum can introduce that narrative to its own attributes, right? In addition to smart contracts, NFTs, DeFi, etc. Now it's part of that deflationary currency narrative that Bitcoin is well known for. And yeah, price of ETH wasn't affected too much actually, as trading around 2,700. And I'll go into more of the price later. And so while Ethereum continues its burn, you could hit the like button for the YouTube algorithm. Turning the like button blue is a great way to learn about Ethereum. So thank you for doing that. With that said, let's get back into the video. Now, speaking of the Ethereum price, let's do a quick price check here. Now, if we go to Trading View and we go to the 1-day chart, we can see that for most of today, it was pretty flat, sitting around 27. I mean, went as low as 27.50, now back at around 27.88. Go to the 5-day. We can see that initial spike leading up to this upgrade here. So it went from as low as around 24.50, now going as high and then dipped right here to about 25.60, 25.70. Now all the way up back to 2,700. And if we take a look at the 1 month, we can see here this massive ride back up. Back in July, it went below 2,000 all the way down to 18, 1,700. Now all the way back to 2,700. And year to date, it's still up a lot, all the way from sub 800. Now over tripled just in year to date. And of course, the 1-year chart, around in the 400s. So you got that really nice gain right here. And again, if we go to CoinMarketCap, we see the similar thing. Now, an interesting article I found was that the Consensus founder, Joseph Lubin, or Joe Lubin, who's also a co-founder of Ethereum, said that Ethereum is becoming ultrasound money. Now, with $13 billion worth of Ether locked up for Ethereum 2.0 and 70 billion locked up in DeFi, we have enormous demand for that Ether token. And what he means about transitioning to ultrasound money ahead of that London hard fork. So what he means to say is the London hard fork is part of a broader global movement, the first step towards the democratization of the earth, and the second step is democratization of DeFi and introduction of ultrasound money. So the term ultrasound money has been a long-running meme, which mocks Bitcoiners who describe Bitcoin as sound money due to its capped supply of 21 million. So the EIP 1559 proposals could make Ether supply becoming deflationary as more Ether is destroyed rather than created. So it's a net deflationary. So yeah, very interesting stuff here from the founder of Consensus. And another interesting here, it's a major milestone for Ethereum 2.0, which will make it become proof of stake from proof of work. Now, what can we expect in the future of Ethereum? Any more upgrades, right? So if we go back to their website here, so right above the London hard fork details. If you scroll up there, we see that there's another improvement called Altair. It's currently in progress, and it's the first scheduled upgrade for the beacon chain. Expected to go live in 2021 or later in 2021 in this case. We'll add support for sync committees, which can enable light clients and bring inactivity and slashing penalties up to their full values. So if we go to what the beacon chain actually is, it says here, it doesn't change anything about Ethereum. We'll coordinate the network. Importantly, it introduces proof of stake, and it's known as phase 0 on the technical roadmap. So by coordinating the network, it says to coordinate expanded network of shards and stakers. It won't be like the Ethereum mainnet of today, and it can't handle accounts or smart contracts, interestingly. It will change over time, but it's a fundamental component of secure, sustainable, and scalable Ethereum we're working towards. And again, they're introducing proof of stake, so very interesting to see the change from proof of work to proof of stake here. And setting it for shard chains, relationship between upgrades, so the ETH2 upgrades were somewhat interrelated. So the beacon chain will exist separately initially, but they will be connected and merge. That way the mainnet will also become proof of stake as well. And you can read more about it here on their website. But yeah, main takeaway here is that it will introduce proof of stake to Ethereum. And you can see the Ethereum 2.0 specs here in their GitHub. I'll link to it down below in the description for if you want to take a look at it. Just has some markdown write-ups, and you can go through the GitHub repo and look at their code. Interestingly, if I search up what Altair actually is, it'll mention this Wikipedia article. Now, pull this up here. It's a constellation of Aquila, and the 12th brightest star in the night sky. It's currently in the G cloud, an interstellar cloud, accumulation of gas and dust. Now, don't know if the accumulation of gas is referring to Ethereum gas. Just thought that was an interesting little connection there. And what I initially thought was Altair from Assassin's Creed. So if you happen to get that reference, be sure to comment down below if you get that reference. And yeah, just very quickly, Ethereum was also mentioned on CNBC, calling it "Here's why it's a big deal." You can read through it again, but it's the same sort of highlights. And the founder of Ethereum, Vitalik Buterin, says more confident about the merge following the London upgrade. So it's a success, and definitely the most important part of the London upgrade. More than 3,500 ETH, around 9.8 million has been burned. Current mainnet will merge with proof of stake beacon chain, marking the end of proof of work. So yeah, very interesting stuff and very good words from the founder of Ethereum. Now to go into the technical bits very quickly here, just one thing to note right off the bat is that these new changes are written in Python. So for any of you data scientists out there, once you take a look at the code, you should be able to get a fairly decent fundamental understanding of how it works. Especially they give some comments here and there. So yeah, I'll link to that down below in the description as well. It does give some more information about backwards compatibility. It even says right here, so they have to do some test cases as well, security considerations, etc. One thing they did note here was if you go back up here, they introduced a new transaction type, EIP 2718. And what they're referring to is just a transaction envelope that's typed. So what it means, it defines a new transaction type that's an envelope for future transaction types. So kind of like a wrapper for any sort of transaction. So what that could mean is instead of buying and selling Ethereum, could be loans, could be credit, could be, other transactions, right? Rather than buying and selling, which could be interesting. Again, my speculation, not really sure that'll be the case, but just something to think about. And if you want to learn more about other EIPs or Ethereum proposals, I'll link to this down below in the description as well. This is the main page for everything about EIPs. And again, this is going over the various specs for Altair and their Ethereum's main GitHub page. So if you notice, some of their languages are Python, but JavaScript, C++, TypeScript, HTML, and Solidity as well, which is their smart contract language. So I'll link to this down below in the description if you wanted to get your hands dirty with learning more about the implementation of Ethereum. And yeah, that was a run through of the Ethereum London hard fork and future updates. So feel free to comment down below if you have any other questions or concerns, and I'll be happy to answer them. Now, speaking of Ethereum, crypto, and investing, you can get started with investing in stocks by using my Webull link down below, and you can get 2 free stocks when you deposit $100. And you can also get started with investing in not just Ethereum, but also Bitcoin and other crypto by using my BlockFi link down below. You can get up to $250 in free Bitcoin when you sign up using my link down below. So I hope you found a lot of value from this video. If you found this video helpful, be sure to hit the like button, subscribe to my channel, and hit the bell to get notified when my videos get uploaded. Also, comment down below what you learned from this video and what other topics you want to see. And share this video with anyone interested in learning about data science. And follow me on my socials for even more data science content. With that said, thanks for watching. Take care.